Hello. President Trump just signed into law the new tax code and flipped the script on the IRS tax code again. This was a major, massive bill that they have been trying to pass. Oh my goodness, and get it passed before America's Independence Day, July 4th. And they accomplished that goal. He signed it into law on July 3rd, entitled the One Big Beautiful Bill Act. Every major tax overhaul always has a long name that we always have to reduce to some type of acronym. So this one is going to be the OBBBA. This is interesting, but anyway, I want to break it down to you. Now, keep in mind, this new tax law is over 900 pages. So we are not about to go dive into 900 pages of tax code right now and me decoding everything for you. You don't need to know that. We're going to do this piece by piece. So what we're going to touch on here, what we're going to break down here is the main provisions for business owners and the main provisions for individuals. I am Nafisa Manera Fudayil. I'm your tax attorney and CPA. Let's get started. I want to say welcome back to Let's Talk Taxes Tuesday, where we don't just read the IRS tax code, we decode it. Yes, we decode it and break it down into simple terms that you can understand. So, with this new passage of the bill, we want to talk about who are the winners, who are the losers, and how can you play it smart so that you can make sure that your clients are taking advantage of these tax provisions that are in the new tax code. So, let's go on and get started. All right. So, first, we want to talk about what are the main provisions that's going to be affecting business owners. The first main one is going to be the QBI deduction, right? And we all know this is a qualified business incentive deduction. It's been around for a few years now, right? Which allow business owners to deduct 20% of their net income, right? Well, this provision has just been made permanent, right? Because it was set to expire from the 2017 tax bill. It was set to expire. So they have made it permanent and it will no longer be expiring. So that means that more people are going to be able to benefit from this. And at the end of the day, what are we talking about? We're talking about a deduction. So if your client, for example, has $100,000 net profit, this QBI deduction is 20% that's coming off the top. So that means $20,000 is coming off the top as a deduction. And therefore now, even before AGI, they have $80,000 instead of $100,000 that they're working with. So this is a huge deal. And there was some uncertainty that was taking place before, but now that it's been made permanent, it's a great thing for business owner to take advantage of. Another main tax provision that they passed, which we loved before, was bonus depreciation, right? Being able to take 100% of whatever cost that you invested in as a business owner, whether you invested in machinery, equipment, bought vehicles, even private jets, yachts, right? Any type of business equipment that was, tangible business equipment or business assets that you purchased, you were able to take 100% of the cost as a deduction in the first year. Well, over the last few years, that 100% has slowly been phased out and phased down. So now we're down to 40%, right? 40% bonus depreciation. So what this new tax law did, it rammed it back up to 100% deduction. So this 100% deduction is now this 100% deduction is now something that's going to be enforced. And this is something that your clients will be able to use again. And keep in mind, if you have a lot of clients that deal in real estate, This will be a great opportunity to start once again looking at a lot of these cost segregation studies to be able to um, separate a lot of the furniture and fixtures and different equipment that you purchase when your client purchases real estate, cost segregation studies, so that they're able to utilize this bonus depreciation against those particular furniture, fixtures, and equipment of that nature. So a cost segregation study could be a great benefit to your client in this instance in terms of being able to utilize this 100% bonus depreciation deduction. Another business deduction is the research and development. This is now fully deductible. So any type of research and development that is geared towards innovation, software companies, technology companies, any type of innovation in manufacturing, these is going to be fully deductible. Okay. And they're going to be certain, of course, all of this has certain provisions and certain requirements that your particular client is going to have to qualify for and going to have to address. But at the end of the day, research and development costs are going to be fully deductible for your client. Any type of innovative product. Now, our last business deduction that we want to talk about today, or our last business aspect of this tax bill, is going to be focused on the opportunity zone credit. The opportunity zone credit. Now, this was a big deal. It was first passed in 2017, and the opportunity zones now are designated by the individual states or the individual, let's say, municipalities, right? But the money or the credit is based upon the federal government, federal tax law. Okay. And so, what these opportunity zones are, or how it basically operates, is this. Let's say you sold some stock or you stole some real estate, and so now you have a gain. You have a gain, right? And you're going to be taxed on this gain, right? Because the IRS taxes all income, all increase in wealth from no matter what source, right? So let's say it's $100,000. Let's just say, for example, you're going to be taxed on this $100,000 gain. Well, you can now look and say, okay, well, let me take this $100,000, which I'm going to invest in something anyway. Let me go ahead and invest in an opportunity zone area, whether it's building a particular building in that area. You're going to invest in something in that area. And if you invest in that area and you hold that particular asset in opportunity zone for at least 5 years, that's going to increase your basis, right? Increase your basis. In other words, it's going to decrease the amount of money that you have to pay gain on. You have to reduce the gain that you would have to pay tax on. Duh. And if it's located in a rural opportunity zone, right? Then this you can increase your basis up to 30%. In other words, your gain is going to be reduced by 30%. Okay. And if you hold on to that particular asset in the opportunity zone for at least 10 years, you will not be taxed on the gain for that particular asset at all. Right. So this is definitely a benefit in terms of long range planning for your client, right? To take advantage of investing in these opportunity zones, because usually once they sell a particular asset, they're not just going to hold that cash in the bank. They're going to deploy that money out into some other type of venue. So why not let it be an opportunity zone area that they invest in? So those are the main business aspects of the tax bill that I wanted to make sure that I brought to your attention so that you are aware of for your business clients. Okay. And also too, in case they come and ask you. Now, in terms of individuals, let's look at what's going to be available for individual taxpayers. Okay, let's talk about them. Well, number one, we got lower tax rates. right? So what this new President Trump bill did is it lowered the tax rates. If it's lower tax rates, that means you're going to pay less. Hmm. This is not complicated, okay? Increase the standard deduction, right? So the standard deduction for a single person is now going to be about 15,000 and some change, okay? For married filing joint, it's going to be about 31,000 and some change, right? So this is a big deal for those who utilize the standard deduction method to be able to reduce their taxes, okay? For those who utilize itemized deduction method, right? And specifically for those who are located in states with high state taxes, they have now increased the deduction for any state and local taxes. Because what happened was with the previous law is that they put a cap of $10,000 on the deduction that you could take for your state taxes. Whether you were talking about sales tax, property tax, regular state income tax, it was capped at $10,000. Where if you're in a high sales tax or a high state income tax state like New York, New Jersey, or California, right? $10,000 is not really a lot of money. Okay. So they raised the cap to $40,000. So you or your client would be able to take up to $40,000. It's still a cap, but hey, it's better than nothing. 40,000 is way better than 10, especially for those who live in those high tax areas. All right. Let me see what else. And that's not a permanent tax, too. That's a temporary tax. That's only through 2029. Um, Another one which you might hear a lot about, but the impact of it is not really that much of an impact for, I think, a lot of your clients. And the reason why I say this is called the car loan interest deduction. The car loan interest deduction basically allows individual taxpayers to take up to $10,000 of a deduction for their car loan interest, right? So this is going to be for your clients who don't have any type of business, don't have a side hustle, aren't self-employed or anything like that, because there are deductions that's already available for them to utilize and get that interest fully deducted if they have a business. But for those who do not have a business, this might be a great benefit. Now, it's only going to be for the American-made cars and those purchased, I think, after January 19th of 2025. Okay. So that's something that a lot of people will be talking about. But again, if you're a business owner, if you're dealing with a lot of clients who are business owners, they're already their vehicles in the interest that they pay, if they pay it on those loans, are already should already be getting deducted anyway. Okay, for business purposes. Okay. The child tax credit, if you have clients that with children, small children or young children, right? That has been increased to $2,200. A senior deduction. Now, remember, one of the big things they were trying to get passed through with this tax bill was no tax on Social Security, right? Well, that did not pass. But I think they put this in probably as just another way to say, okay, we want to do something for the elderly. So what they did was they increased the senior tax deduction. So remember I said that before that the standard deduction is going to be about $15,000 for a single person. And if you are 65 and older, if you're a senior to 65 and older, you were allowed an additional $2,000 on top of that. That was the previous law. But with this new law, they have raised the additional deduction from $2,000 to $6,000, right? So that $15,000, if your client is a senior, 65 and older, that $15,000 plus that additional of six, that's $21,000. Now their standard deduction has went up to $21,000. They would be able to reduce their income by. So that's something that they kind of gave the seniors and the elderly, since they wasn't going to be able to pass the no tax on the Social Security benefits. And the last thing I want to touch on is the overtime pay and the tips. Okay. Now, I do want to make it clear it's not so much that the tip income and the overtime income is exempt. It's not exempt for taxation. Okay. What they did was provide a deduction against your tip income, a deduction against your overtime pay, okay, or your client's overtime pay. So we want to make sure that we're using the correct terminology when we're talking about this, particularly with our clients, because a lot of times our clients might be saying, "Oh, well, I have tip income, is I don't have to pay any tax on it, so therefore I don't have to report it on my tax return." No, that's not exactly what it is. No, you're still supposed to be reporting your tip income. You're still supposed to be reporting your overtime income, is that then you will get a deduction against that tip income. You will get a deduction against that overtime pay. Okay. So that's just something to keep in mind with that. Okay. And those are the main provisions. I think I did have a couple more that I wanted to talk about right quick. Let me look at my notes that you might want to inform your clients. Oh, number one, one of the other ones was the charitable deduction. Because, generally, for the most part, the charitable deduction during a previous tax law had been reduced to only $300. If you don't itemize, this is for your clients who do not itemize their deductions, which is a lot of people, okay? So if you have clients who do not itemize their deduction, but they do charitable donations, they were limited in terms of cash to $300, right? So that has now been increased to $1,000. And if you're married, filing joint, it could be up to $2,000. Again, this is for those clients that you have that do not itemize their deductions. Okay, so that's going to take effect 2025, right? Another thing was, I thought that was interesting in this bill was the limits on student loans. The limits on students' loans was in this particular bill. I thought this was very interesting, and particularly as it relates to student loans for graduate education. And basically, what they did was they limited the amount that students could borrow from the federal government, guaranteed by the federal government for graduate education. And they limited it to a lifetime of $100,000. So if you trying to get your master's and you trying to get your PhD, you're only going to be able to get $100,000, not per degree, $100,000 of graduate education of loan money from the federal government. Now, if you are pursuing or your client is pursuing medicine or if they are pursuing law, there is a $200,000 cap. Okay. There's a $200,000 cap, and that's going to be $50,000 per year. So I thought this was very interesting. So I wanted to make sure that I let you know this so you can talk to your client about it. Particularly, a lot of people start to pursue graduate degrees. They want to get their master's, they want to get their PhD, they want to get their law degree, and so this is something that's new that was passed in this particular bill. So that's generally the provisions I wanted to cover. I will, as I go through the 900 pages, and probably want to go more in depth in the future on some future videos, some future episodes of Let's Talk Taxes Tuesday, so we can get more and more into some planning and being able to serve our clients so that we're able to reduce the amount of their tax debt and also prevent them from future tax debt in terms of doing more tax planning and tax strategy with our clients, right? So this is why this matters to you. All of this matters to you, even if you don't do tax returns, if you don't do tax planning, you don't do tax strategy, but you just focus on tax representation. This is important to you because one, it helps maybe give you some strategy to resolve some of your clients' tax debt. Number one. Number two, it can give you more tools to help you save your clients some money. And three, it also establish you more as the go-to expert when you're able to not only simplify and articulate what's going on with the real with the passage of the tax law. When your client comes to you and asks you about specific provisions, particularly the popular ones that I talked to you about today, you're able to, you know what they're talking about, you're able to have a discussion with it, and you're able to coordinate or maybe talk to their CPA about it, right? And maybe establishing your credibility too as a tax law expert, right? Even if you don't actually carry out the specific calculations or doing the actual return, knowing the tax law and how it all impacts from a high level will give you more credibility and further add to your expertise, right? And make sure if you like our content, make sure you like us, subscribe to us, join us because we have a newsletter that we like to put out. We want to make sure that we are informing, not only informing our clients or potential clients, but also for informing you as a professional, right? And this is why we have a program where we train other attorneys, CPAs, and enrolled agents specifically in the tax representation industry. So if you want to know more about our program, or hey, you just want to know more about the tax law from this perspective as we decode the IRS tax code, regulations, tax cases, make sure you follow us and check us out. You can check us out at taxroadmapusa.com, and also you can DM me if you got a particular question, right? We're here every week on Let's Talk Taxes Tuesday. I am Nafisa Manera Fudayo. I'll join you and you join me next time. Bye.